Welcome back to another episode of the Paper Gain Show. I'm Johnathan Rankin, joined by my co-host Matt Magee. Matt, what is going on? It's been a nice week so far.
Yeah, it has been good. Glad to be back. I think we've got a fun episode here. So you want to kick us off?
Yeah, this is as Matt and I talked about right before we started recording this we've talked a lot about different financial concepts and topics and markets, but after what happened this past weekend, and for those who aren't familiar, Warren Buffett announced that after 60 years at the helm of Berkshire Hathaway, he's going to be stepping down as CEO. And we felt like we want to spend an entire episode paying homage to someone who really has shared so much wisdom with investors over the course of decades and has really helped shape what we think from an investing standpoint overall, from as many people do. So he shared a lot of lessons, and we're going to try to just pay homage to some of our top lessons that we've taken away from Warren Buffett over the years, and just wanted to make sure that we spend the time to talk about what he's shared with us. So Matt, tell me about how does Warren Buffett impacted you and your thoughts around investing?
Yeah, I think he's one of the first, if not the first, that I'm aware of that got very good at content creation and just general education. I mean, if you just look at his annual meeting that he held over the weekend, there were like 40,000 people there. And so, one, it was just very cool that his ability to talk about very complicated things. He clearly had thought about it significantly and was very good at articulating it for somebody like myself that and just makes it very simple for people to relate to and understand. I mean, the buy and hold great businesses, having a margin of safety, uh, having, I think he said over the weekend that he had made like 12 good decisions in his entire career, which is insane that that's really what it came down to. That led to, I think, the number that was all over social media this weekend was like the his returns over that extremely long period of time was like 5.5 million% versus the S&P quality over price around all the wisdom around compounding. I would say his legacy will live on just from the vast amount of talks and different things that very common sense wisdom that I think will be universal even 30 years from now. What
I think
about
it
you?
well, one, I think it's funny that one of the stories that I heard was how he actually came about acquiring Berkshire, and he did it through pettiness. I don't know if you heard this story. So he had taken a about a 7% stake in Berkshire Hathaway, which was a textile company at the time. And at the time, the CEO created a deal with Warren to then buy back the shares that Warren had accumulated. And when the deal terms showed up to Warren Buffett's desk after they had already agreed on price, in the writing, the CEO tried to get one past him and shorted him 12 cents per stock. 12 cents per share was what he was trying to get over on Warren Buffett. And so instead of going through with the deal, he ended up acquiring more and more of the company. At the time was actually a failing company, and then eventually made sure to he gained control and then fired the CEO. And I think it's such a, I don't know why, it's kind of one of those, we think of Warren Buffett as this amazing investor with these, that has these amazing long-term returns and these standards of just value buying and buying great businesses and investing for the long term. But then when we think of the namesake of the company, it was purchased during just a kind of a little a petty battle of revenge. And I think it just shows to me that he was human this whole time, and I think we, especially in the investment community, I don't know about you, but we've always held, Warren Buffett to just a high standard. I mean, we put him on a pedestal, and it rightfully deserved. But when you think of stories like that, and the Coca-Cola a day and the McDonald's that he eats, at the end of the day, he's a regular person, which I just love.
Yeah, yeah, and his former partner Charlie, the two of them, all of those annual meetings where will live on in YouTube for years to come. Yeah, and I'm sure you've heard it as well, and many others have, but how there was originally like a third partner, including Warren and Charlie, that tried to get wealthy too quickly in their eyes and had leveraged up his position. And then they had a downturn. I forget the exact time frame. This was decades ago, but they ended up buying him out. That story, I mean, there's endless stories. What are some of the more memorable investments that come to mind?
Well, obviously, we can think of Apple, but I think of when in 2008, when really he was kind of pushed by the government at the time to just start helping in that bailout process, some of the institutions. I think that just showed what an institution he was himself. But it's interesting because I think about the thought of what Warren Buffett has contributed to investing, which is the thought of, as you mentioned, long-term focus, value investing, buying businesses, not stocks, and all of these sayings, be fearful when others are greedy and greedy when others are fearful. But I don't know about you. Do you see many investors actually act like that? And that's the difference of, we see someone who has built this massive business, but then when you actually look and talk to retail investors, they don't think of it like that. We just went through a pretty volatile period in the market over the past couple of weeks, and how many people during those time frames were being greedy, and really were taking advantage of that, that sell off, or you know who were having that long term focus, thinking, all right, well, I've got good quality positions here that I believe in. I don't necessarily need to, think about the volatility, because I believe in the companies. A lot of people question what they own, and I wonder if that's is that, do you think that attributes to the fact that most people own, whether it's ETFs or funds, and not just the individual businesses themselves? And I don't know. I just think it's interesting that we have someone who's shown success with one type of investing, value investing, buy businesses, not stocks, and then we have trillions upon trillions of dollars in the financial services industry, in ETFs and funds that kind of get away from some of those values. I don't know. I don't know. Does that sound like I've seen it wrong?
Yeah. Uh, One, I think, uh, yes, the average retail investor acts nothing like Warren. And I think that's for a number of reasons. One, their situation is wildly different than his situation. Like, I mean, they've got Berkshire has like 300 plus billion in cash and short-term treasuries. But he didn't get there overnight. That's the product of 60 plus years of compounding. I would say I have seen plenty of investors that are good about tuning out the noise, taking a long-term perspective. But on average, yeah, the average investor is much more worrisome than Warren's long-term perspective. I think that's totally normal. I think that's where the value of a good advisor comes into to play. I wouldn't say it comes down to holding individual stocks versus ETFs. Plenty of uh, Berkshire disciples just invest in Berkshire Class A or B shares, which are effectively like holding an ETF. Like it's
Yeah.
just a basket of securities. It's just a different way of holding it.
Yes, but I think part of that is, I mean, if we think about it, if because people want to, if they want to take the lessons and invest kind of like a Berkshire, then I think that's the part where do they have that discipline? And the other side of it is where I wonder where would we think of Warren Buffett in the same light had it not been for a 39% exposure to Apple, and so the fact that he is concentrated and concentrated in probably arguably one of the best performing stocks of our generation, it's interesting to see something like that uh, um, when as advisors, we talk about diversification and asset allocation, and then you've got one of the biggest investors. And I'm not saying anything against Warren Buffett at all. I mean, obviously he is extremely successful. I wonder if the way that he actually acts and what he does, is that something that more investors should look at, which is, if you look at it, he was concentrated in certain positions, and yes, he was long term with them, but it's not as if he was living by the prudent man rule of 5% in a single holding. I mean, he had at one point 39% in one company. Granted, he called one of the best companies,
Yeah,
but concentration is still concentration. I don't know. I
yeah,
think these are things that I think it's important if we're going to honor the way that he taught people. I think we have to also honor the way that he actually acted. And I think that there's contrast there to what, you know, the by the textbook belief would be of how you actually invest and allocate assets.
yeah. I think the more I've done this and the more personalities and investment styles that you see, I think having a more concentrated, active portfolio that mimics more his style of investing can make absolute sense, especially in specific type of accounts like a Roth or a trust for the next generation. If you have your cash figured out and you are taking that long-term perspective. But I would say that's when having a very serious conversation with the client, the investor, uh, feeling out are these the type that we have a 10-15% drawdown like we had earlier this year, are they going to want to pull the
Yeah.
ripcord? Are they the type that you meet with once a year and they're like, so what's happened in the portfolio? Like truly no clue what has happened. If it's the latter, yeah, I think it absolutely makes sense as long as everybody is on the same page and it's appropriate for that individual. So I think just having those conversations on the front end or as things change, you name it, that taking a more concentrated uh, position um, can make sense as long as everybody knows what they're signing up.
Well, it's interesting because, obviously a big reason why he was able to make a lot of those, I would say more concentrated, bigger bets is because he had, these staples of Geico and Rails and all and businesses that were very consistent, which is
Yeah,
interesting because in light of everything we've seen over the past couple of years on the insurance front, whether it's the fires in the Palisades in LA, or just auto insurance issues and the rate increases that we've seen there, it's interesting that I haven't really seen pushback against Buffett, even though he owns Geico. It's just, I think it's kind of fascinating that it just doesn't,
yeah,
nobody, at least most people don't see him as, the owner or CEO of Geico, even though he
yeah.
is, he doesn't necessarily oversee the day to day. But I mean, at the end of the day, his company owns it. And it's interesting that I haven't seen any pushback on that when you see so much pushback in the insurance industry. That's just,
Yeah, I think that's a product of uh, the multiple layers of uh, Berkshire kind of keeping its corporate name and then holding the individual companies like Geico in this example. where Geico is still its own name versus his name on it or Berkshire. So I think it's more a product of that, just the nature of insurance, where you're buying a policy and you're expecting the insurance company to pay for your health insurance or your claim. But and I think it's good marketing and PR on their part. Like it's with the annual meeting and the books and the various things that um, that he has a cult like following. Like I definitely I'm not following any other 94-year-olds. That's for sure.
So as I mentioned, I think we have to question certain aspects of what he's done because they have this large cash stockpile. And Warren Buffett, I mean, he's 94 years old, like you said. Do you think should he have stepped down a while ago?
I would say, obviously, I don't know what day to day looks like, but it's my understanding that there's been for a number of years. This is like 10 years in the making from what I've briefly read. That there's a head of insurance, there's two investment advisors that are overseeing that, and then Greg has been being groomed as the CEO of it all, if you will, for a number of years. So I think it's just slowly been in the works for a number of years, and uh, you often see like the succession planning that goes terribly wrong or is rushed or not prepared. Um, should this have happened sooner? Maybe, but
I only ask that because I wonder if would have a successor taken advantage of more opportunities in the market over the past couple of years. Just I mean, in the fact that we were at a recent market high in February, so obviously we had two pretty good years in the market in 23 and 24, and obviously hindsight's always 2020. But I wonder if you just always have to question, would a successor being younger have put some of that money to work earlier and taken advantage of it? Or
yeah,
are
I
we
mean,
going to look back and go through a major recession, and then next thing you know, they're going to pick up a bunch of assets like they did with Apple, and we're going to go, yeah, okay, they were a genius for a reason. I don't know. It's just
yeah,
always an interesting question.
I think it's like a lot of things, gray, if you will. But it does seem like I, I haven't looked at what they've been buying, but I would be very surprised if they haven't been buying something over the past couple of years, even if it's smaller positions. But they definitely have not, unless I totally missed it, have not done any major, call it 30 billion plus, like BNSF style acquisitions that
Yeah.
grab the headlines. But
Well, I guess that's the hard part is that you can only buy so once you get that much money, you can only buy
yeah,
so much that and then it becomes a big issue. Uh, what are your thoughts on someone like I don't know if you've heard like Bill Ackman, who's trying to get into the commercial real estate side of it to almost kind of try to create his own Berkshire is what people are saying. Do you think something like that can it be redone without the the rails and the insurance of that stability that those businesses provide? Do you think that will we ever see another war?
I don't know. I did see that. I guess call it the internet trolls of X. Uh, maybe I think they have a point to a degree here. I don't know exactly what the fees were on Bill's permanent vehicle, but they at least latched onto that initially, which made for an easy target and easy online trolling. Saying that Warren would never apply such exorbitant fees on a permanent vehicle. Do I think it can be recreated? time will tell. I mean, that you often see even like tech CEOs or investment managers. You don't see people do it for that long. So I hope it is. That would be amazing to watch somebody now that I'm paying way more attention than maybe I was 20 years ago, much less 60 years ago. I wasn't alive. And so I'm hopeful that somebody does come along. I think there's always opportunity out there. I think Warren took advantage of uh, like the cigar butts and that whole investment philosophy early in his career. Charlie helped him kind of see past that and start buying quality businesses because there's just not markets became more efficient. Things drastically changed. So from that perspective, like the starting point, it's wildly different. But I'm sure there's a lot of timeless lessons in what they did. But I mean, I'm looking at like his C's Candies. It's a famous one. Purchase price like 25 million, earnings well over 2 billion, just in pre-tax income, and they haven't really changed that business much. So I'm hopeful. Well, what do you think?
Yeah. I don't know. I mean, I think that people are going to try. I think that he
Yeah.
had the benefit of that, of having a few different things at his back. One, like I said, the stability of the insurance and rails, which I think is a little bit more um, less cyclical than, I mean, insurance is one of those things that everybody has to, we're all at the mercy of what they're going to charge us. And yeah, you can shop around at the same time. You're still at the mercy of, different companies. Um, so it'll be interesting to see. And I think that he benefited so much from that concentration level that it'll be interesting to see if another mega investor, whether it's an Ackman or someone else that comes along that's going to try to do something similar, if they're going to take as big of bets. And the one thing that I really respect about Warren Buffett is that he stays true to who he is, meaning that, I mean, if we really think about it, he said over the weekend that if someone offered him all of the Bitcoin for $25, he wouldn't take it. And, because he just, he hasn't believed in that. But the reality is things at $95,000 or give or take, some $1,000 here or there. But technically he was wrong about that. He was wrong about certain aspects of missing out on different businesses, whether it's like a Google or an Amazon or Microsoft. I mean, there's clear big misses. I think what was it 2 years ago? I think he bought a stake in Paramount, and that didn't go well. So it's not like he's been this perfect investor who's not had losses. I think back to the airlines and just other issues that we've seen. But one thing that he's always done is he's stayed true to just, this is my belief system. And I think if anything, that's the biggest takeaway, is that he was comfortable in who he was, understanding he's not running anybody else's race. Yes, he's looked at as a steward of capital for millions of people out there, and they're trusting him, but he's has to stay true to what his values are. And I respect that more than anything, because it's so easy in this day and age to just get caught up in what is that next big thing, and we haven't heard about you know Berkshire getting caught up in the AI wave or the crypto wave, or things that we've seen over the last couple of years that would have been easy for any mega mega company like this or conglomerate to just say, all right, well, we've got 300 some odd $billion just sitting in cash. Let's deploy a couple billion in these different areas, because we have to feel the pressure of saying we're investing in AI. I mean, think of how many times do we hear from corporate CEOs or on CNBC, where they talk about during quarterly earnings calls, the amount of times that AI was referenced. I mean, why do you think Apple named it Apple Intelligence? to have the AI frame there. So it's interesting to just to see that, he's never really bended the knee, and I respect that more than anything. So that's
Yeah.
my big takeaway.
Yeah, I think to end on a similar note, like it was very cool that, I mean, to that point, like he was so, I mean, Charlie, their too hard pile always had tech in it, and they never even really, I'm sure I mean, he's been longtime friends with Bill Gates. So, like, he had access and like he just didn't understand it or for any number of reasons, but he did finally adapt to tech, if you will, and bought arguably one of his best, uh, maybe not percentage wise but dollar wise, investments near the end of his career. So it's very cool to see what him doing, or them doing things on their terms,
Yeah.
while still staying humble enough to learn about different industries and different things with the Apple, and not just being an absolute mega home run for him. So
I wish we could all hit a home run like that, and
yeah,
I'm excited to eventually talk about the next Warren Buffett as we see it. But I'm
yeah,
glad we were able to at least spend this time just to go through some of the lessons and thoughts of what he's taught us, and for our careers, and what he's taught just generations of investors. And I'm anxious to see where Berkshire goes from here, and if the new steward of capital, how they do, how the company does under new leadership. It's going to be fascinating to watch.
yeah, it will be. Yeah, can't wait, and see you next week.
Absolutely. I'll see you next week.